and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by giving an update to my portfolio, where I'm discussing my latest purchase of Unum Group, and afterwards we will look closer at the earnings call from Unum Group as well. So let's start with the portfolio update. So the first thing we immediately notice is that there's a green circle for this week's episode, meaning that the portfolio is up in value compared to last week. So if we go to the portfolio values tab here, then you can see that the portfolio has increased by $6,100, but at the same time, you can also see here that the cost has increased by $5,065, meaning that the portfolio has actually had a gain of around $1,000 besides the additional $5,000 which have added into the portfolio. You can also see it depicted in the graph over here. If we then continue to my favorites tab, namely the dividends tab, then we can see that August has started out really well, since I've already received more than $170 within the first week of August. And these dividends came from LTC, which paid a little more than $11, Verizon, which paid a little more than $78, then CVS Health Corp with a little more than $29, and finally Bristol Myers, which has paid a little more than $54. If we then scroll to the right here, then we can also see that the estimated average yield has increased since last week. This is both due to the fact that Simon Property has increased the dividend from $1.40 per share to $1.50 per share, meaning an increase of 7.1%, but also due to the fact that I have added more shares of Unum Group, since Unum pays more than 4% in dividends. So it's only very natural that the estimated yearly income has also increased, and it's quite easy to calculate since I've added 200 shares and they pay 30 cents per share every single quarter. So that is 200 times the 30 cents, and then we need to multiply by 0.85 since I have 15% in withholding tax. So the additional amount that I get each quarter is equivalent to $51 or $204 in estimated additional yearly income. If we then go back to the overview arc here and focus on Unum Group, if we then scroll to the right here, then you can see that the average dividend yield for my investment in Unum Group is 4.36%. And what you can also note here is under invested is that Unum Group is now the largest investment which I have done, since I have invested a little more than $19,000 into the company. But since I'm still down on this holding, they only take up 11.28% of the entire portfolio, and due to the fact that my investment in store capital is up a little more than 9%, they are actually still the biggest position in the portfolio, since they take up 11.83% of the entire portfolio. If we then turn to Seeking Alpha and take a closer look at Unum Group here, then let me try and explain some of the reasons why I have decided to go and invest more. So if we start by looking at the price chart here, then we have the 1 year graph, then let me immediately change that to the weekly graph. Then you can see something really interesting happening on the 4th of August. This was actually the day when they came out with their quarterly result, and apparently a lot of people were not too happy with what they saw, since the stock was actually down more than 8.5% at some point. I was actually quite surprised to see this drop on the 4th of August of more than 8.5%, especially when you then consider that they came out with their quarterly result. And when you look at the quarterly result here, you could see that they beat the non-GAAP earnings per share by 27 cents, and at the same time they beat the revenue estimate by 30 million, even though they are down 1% year to year. If we then turn to Unum Group's webpage, well, then we can see the quarterly result here as well. So I will of course include a link in the description below for this webpage, so you can go and read it for yourself. So the first bullet point is identical to the first news item we saw on Seeking Alpha, namely how the earnings per share has developed. Then secondly, they are showing or telling that the market conditions are improving for the business. Then thirdly, that they still have a strong balance sheet and that they have a lot of liquidity. Then fourthly, that the book value per common share has increased by 3.2 percentage points year to year, meaning if you're buying the stock today at around $26, well, then you're actually buying at half book value. And finally, on the fifth bullet point here, that the outlook of the company has actually improved. So now they are expecting a decrease in operating income per share of 1 to 3%, where they were previously expecting a decrease of 5 to 6%. So since the outlook for Unum has actually increased when we looked at the quarterly results, since they're now only expecting a drop of 1 to 3% instead of 5 to 6%, and we saw that the earnings per share was well within line of what the analysts expected, well, what is then the reason that we saw a drop of more than 8.5% when they came out with their quarterly result? If we then try and turn to the earnings transcript to see if we can find an explanation here. So let's look closer at this earnings transcript. And what am I specifically looking for here? Well, specifically I'm trying to identify some risk that the investors wouldn't like to see. So do we have some potential losses to which we do not know the size that can easily spook a lot of investors? Well, currently we have this global pandemic going on, so that could at least be one thing. But is there something else that could also cause investors to sell out of this stock? Well, let me try and go through this document. What you need to know is this abbreviation LTC, which is short for long-term care. And Unum Group has sold a lot of long-term care packages, which they have received a lot of premiums for previously. But if we just go to this comment from the CEO of the company, then we can see in this sentence, and it is also addressing one of the bigger concerns that people have about the company today, and that's the overhang of our LTC obligation and liabilities there. So that's the thought process. I really can't give you any sizing today or timing to that, but certainly that's a thought process that we are in the middle of today. So these are the two main risks which I can find when I go through this earnings transcript, namely the global pandemic and this long-term care obligation to which they can't really determine the size. So I'm not saying that these risks are not real, I'm just saying I can't see that they have materialized on their quarterly result yet. So currently I think that the market is overreacting, and that is why I was happy to buy more shares when I did Wednesday. So to summarize this is really risk versus reward once again, since obviously there are some risks, but since I can't see they have materialized, and when I look to the PE ratio and see that I can still buy the company of a PE ratio below 6, then I think that I get a lot of value from buying this company. But you really need to be aware of the risks, and then at the same time acknowledging this fact about trying to pick individual stocks. If you are right 6 out of 10 times, then you are actually doing well. So now that you have seen an update of my portfolio and my latest purchase, and especially with this closer look at the earnings call to make you aware of some of the risks which I'm least looking at before I decided to invest additionally into Unum Group, that actually sums it up for yet another exciting week of the Lazy Money Game. So if you like content like this, then please consider leaving a comment or leaving a like or subscribing to the channel. It really helps me out. And until I see you next Sunday, bye!